A rapid uptick in AI-powered crypto scams has alarmed analysts and investors alike, with losses rising more than 450% and victims being impersonated via deepfake audio and video. Many scams are now leveraging sophisticated AI voices to mimic family members or executives, bypassing traditional fraud detection. Even seasoned crypto professionals have suffered losses, reinforcing the critical need for increased vigilance. This wave underscores how technology meant to empower markets can also be weaponized by criminals. Despite regulatory progress, the human dimension remains the strongest defense against deception. A freshly announced US-EU trade deal, including a 15% baseline tariff on European goods, has eased global economic uncertainty and boosted investor risk appetite. Major cryptocurrencies such as Bitcoin, Ethereum, XRP, and Solana rallied moderately following the deal, which helped stabilize markets and renew speculative interest. This cross-asset correlation suggests investors are treating crypto as part of broader risk allocation, rather than a standalone volatile niche. Equity futures also ticked higher, signaling synchrony across global asset classes. Market participants now await whether further extension occurs with other trade partners. Interactive Brokers announced it is seriously evaluating the launch of its own brokerage-sponsored stablecoin, allowing clients to fund accounts 24/7 using tokenized fiat assets. If implemented, the stablecoin would embed within its crypto offering, enabling seamless transfers and seamless liquidity functions. This strategic initiative represents another major institutional validation of blockchain utility within mainstream financial services. Analysts believe having 3.9 million client accounts provides a robust foundation for user adoption. The move underscores the acceleration of tokenized money in regulated circles. Zodia Markets, backed by Standard Chartered, closed an $18.25 million Series A funding round, led by Circle Ventures and others, aiming to expand its digital asset infrastructure for institutional and professional clients. The firm emphasizes real-time settlement across fiat and crypto, supporting over 70 digital assets. The funding endorsement signals renewed confidence in institutional-grade crypto infrastructure and regulatory compliance. Zodia's expansion into the Middle East and acquisition of liquidity platforms reflect broader market maturation. Experts see this as a sign institutions are moving beyond proof of concepts into scalable production environments.
Meanwhile, CEA Industries, a small publicly traded company, surged 833% intraday after announcing its plan to build the largest publicly traded BNB treasury. The company aims to raise over $1.25 billion through PIPE financing, with half of that intended for cryptocurrency allocations. Retail investors responded enthusiastically, sending volume and social mentions skyrocketing overnight. This episode mirrors earlier meme stock dynamics, but with a crypto twist, suggesting new retail narratives are forming. While intriguing, analysts warn of outsized risk if token prices collapse post-speculation. On-chain data revealed whale movements around the Ethereum network, with large wallets accumulating aggressively near $3,700 price levels. Meanwhile, Bitcoin remained range-bound around $118,600 after modest gains, indicating measured institutional re-entry. Solana and XRP also posted intraday strength as regulated clarity has improved investor sentiment. Derivatives open interest surged modestly as traders positioned for near-term volatility. This institutional hardware shift underscores deeper structural participation in crypto ecosystems. Crypto fraud initiatives are forcing platform operators to elevate security protocols. Know Your Customer, KYC, and multi-factor authentication are now being tightened globally. Exchanges and wallet providers are increasing AI detection of account anomalies, but education remains critical. Awareness of impersonation scams is often the first line of defense. Regulators have intensified scrutiny in jurisdictions such as New York, where authorities froze hundreds of scam operations. Crypto custodians increasingly offer loss recovery tools and insurance coverage. This new phase of custodial accountability is reshaping user expectations about digital asset trust. Equity markets responded to trade certainty with regional strength. U.S. futures rose modestly while European and Asian equities gained on reduced tariff risk. Emerging markets Indonesia, India, and Brazil showed sector rotation into trade-sensitive cyclicals. Investors increased hedge exposures using options as risk metrics remained subdued. Momentum indicators signal cautious confidence ahead of key macro events like inflation and central bank guidance. Entirely coordinated cross-region positioning suggests markets anticipate continuity rather than shock.
In credit markets, bond spreads remained stable, even as margin debt continued to grow among retail investors. Institutional credit appetite remains steady, but high retail leverage absolves volatility risk. Large brokerages and insurance firms are increasing allocations into high-quality corporate debt amid regulatory caution. Some central banks may also recalibrate funding frameworks to accommodate tokenized treasury and stablecoin integration. Fixed income volatility measures remain controlled, with implied credit default swaps stable across ratings. Tech sector earnings drove selective equity strength. Major names like MicroStrategy, Coinbase, and Robinhood registered pre-market gains, reflecting robust crypto-linked investor demand. Analysts raised targets on firms holding large crypto treasuries, reinforcing bullish bias. Retail enthusiasm is translating into speculative flows, but institutional reserves remain anchored in large-cap names. Market capitalization ratios reflect heightened tech valuations, but consensus is that revenue models remain intact. Strategic positioning is occurring even amid trading froth. Retail speculative instruments remain elevated. Meme stock-style rallies, especially tied to crypto treasury announcements, persisted as younger investors drove platforms like StockTwits into trending. Margin debt now exceeds $1 trillion again, signaling a return of high-risk behavior among retail segments. However, institutional caution continues. ETFs and managed funds skew toward balanced exposure models. This bifurcation between speculative retail and cautious institutional flows characterizes current market psychology. Financial platforms implementing trading limits and margin warnings reflect this tension. Macro forward indicators remain top of mind. Investors await U.S. Fed guidance on inflation expectations, while upcoming CPI and jobs reports could significantly shift rate policy. Trade deadlines approaching August 1st for Japan and August 12th for China remain focal points for domestic inflation hedging. Meanwhile, regulatory developments like the Clarity Act and stablecoin frameworks reinforce confidence in crypto adoption. Political uncertainty continues to frame investor dialogue across asset classes. These factors underline a structurally cautious but growth-oriented sentiment.
The stablecoin regulatory landscape accelerated with the House passage of stablecoin-focused and market structure legislation. Attention now shifts to Senate deliberations post-recess. Interactive brokers' exploration of a branded stablecoin and institutions like banks filing for issuance mark a rapid institutional pivot. Analysts highlight stablecoin clarity as a key macro catalyst for liquidity strategies. Digital dollar tokenization is increasingly discussed in corporate treasury boards. Adoption of licensed tokens will likely underpin future fintech infrastructure. Emerging market currencies remain stable against major currencies, with subtle capital flows into equity markets following trade deal optimism. The yen appreciated on internal monetary policy shifts, while the euro stayed relatively flat compared to USD. Cross-currency hedging remains defensive amid geopolitical uncertainty. Investors rebalanced treasury exposures based on national risk premiums and trade sensitivities. Currency market stability mirrors broader calm in credit and equity sectors. Commodity trends remained neutral. Gold prices softened amid diminishing safe haven demand, while industrial metals saw modest gains tied to trade optimism. Energy markets exhibited minor corrections as supply signals stabilized. Select agriculture ETFs rallied on marginal demand signals. Commodity-linked equities aligned with cautious rotational flows rather than speculative surges. Investors maintained commodity allocations mainly as portfolio stabilizers. Venture capital sentiment cooled in crypto and Web3 spaces due to macro caution and high valuations. Though institutional treasury strategies remain active,
Early-stage funding rounds are more conservative and structured. Startups emphasize sustainable models rather than growth-at-all-cost narratives. Investments in compliance, security infrastructure, and regulatory readiness dominate development priorities. This environment fosters disciplined growth and strategic resilience.
Real estate markets remain range-bound. Elevated interest rates cooled mortgage originations, while tight inventory preserved pricing stability in major metros. REITs, focused on industrial and healthcare properties, performed relatively well compared to residential subsectors. Developers delayed speculative pipeline projects in response to financing constraints. Expected rental growth reflects low supply environments. Asset class repositioning remains orderly, reflecting transition rather than panic.
On-chain sentiment indicators point toward cautious optimism. Technical support bands for Bitcoin remain firm around $116,000, while derivatives positioning indicates hedged upside strategies. Ethereum's technical charts suggest breakout potential above $3,800, contingent on sustained inflows. Open interest and stability reflect investor discipline rather than speculative frenzy. Options activity emphasizes straddle strategies over directional bets. Overall sentiment suggests consolidation rather than capitulation. Institutional capital continues to flow into crypto infrastructure and services, as highlighted by Zodia Markets' strategic expansion and funding round. This money fuels growth in custody, settlement, and liquidity platforms serving institutional clients. The expansion of regulated trading nodes and interoperability facilities builds trust in mainstream crypto adoption. Partnerships between traditional banks and digital asset firms solidify ecosystem resilience. Analysts forecast further consolidation among infrastructure providers over coming months. In summary, today's market landscape reflects dynamic interplay of trade optimism, regulatory progress, institutional innovation, and retail speculation, all converging across crypto and equity markets. Institutions are deploying capital via funding rounds, treasury strategies, and exploration of stablecoin infrastructure. Retail participants remain active in speculative themes, though largely isolated from institutional flows. Macro dynamics remain balanced, hinging on upcoming policy announcements and trade deadlines. For informed investors, today's environment offers strategic entries within a calibrated and opportunity-rich cycle.